Okay, good morning everybody. It is Wednesday, August 18th, 2021, and we're going to get started with our pre-market analysis on the S&P 500 futures market. Yesterday, things did not quite work out as I expected at least. We did have more of a bullish bias, keeping in mind that we had our bearish indications off the previous daily high. It ended up following through for a little bit more than I expected, but we are finding support right now around 1175 here. So we'll see if the bulls can jump back in and bring this higher, and we'll take a look at what everything's saying for this morning here. So our quarterly, again, looking very strong, no signs of exhaustion here. Same exact story on the monthly, and then on the weekly here. The only thing that I'm noticing is that we did push to a higher high, but we have made a lower high on RVI. But this candle still has today, tomorrow, and Friday to develop, and a lot of things could change by the end of the week here. So I don't want to really rely on that type of indication right now. But so if we ignore that fact, everything still looks very strong with absolutely no signs of exhaustion here. And we'll have to wait for this candle to close on Friday before we really make a call here on what this signal ends up being. So everything very strong, no signs of exhaustion on all three ultra high time frames. And then when we get down to our daily, this is where we had that bearish divergence off of the high from Monday. So when this candle closed on Monday, it gave us a bearish divergence, and then going into the Globex Monday evening and then into Tuesday yesterday, we did get a pretty decent sell-off there. Ended up being about a 60 point. I believe we were at 40. I guess from the highs, you would say almost a 60 to 70 point pullback. And now here we are. So we found a little bit of support around 1175. And right now, from a retracement perspective, we are holding somewhere. Let's take a look here at this whole leg right now. We are holding just between the 50 and the 61.8. So somewhat of a bullish area to hold if it can hold here. And we don't really have any divergence indications right now. So we have the bearish indication from the all-time high that we made on Monday. And outside of that, we just have all this bullish stuff that occurred back on that 10-day sideways market there. So for now, only indication is that bearish signal from the all-time high. Everything does again look pretty bullish except for that one bearish indication off the highs, which is what I would consider an exhaustion pattern. So not necessarily an indication of an entire 200, 300 point sell-off from here. Of course, that could happen because anything is possible here, but not getting the strongest indication of that because everything still looks pretty bullish. We would have to start breaking down and getting through this entire leg here. So we'd have to get through the 38% retracement, which essentially are the highs from back here in mid-July, right around 43.80. And then we'd have to push and break 43.50 and then come down and essentially break through this 42.58 swing high from all the way back on June 15th for all this to really start to kind of fall apart here. But right now everything looks pretty strong. And then on our 4-hour, we do have that bearish indication off of the all-time high that we made on Monday. We've got this pullback like we were just talking about. And currently there really is nothing from a divergence perspective that's really going to help us out this morning. I really don't see any clues here. Everything just looks kind of normal. And again, we do have overall a pretty bullish looking market. We are holding the highs back here from the end of July. You can see that essentially this 4-hour candle just has a big wick, but the bodies are holding right at the highs that we made back at the end of July there. So still really looking bullish, and I think that's really all I have to say with the 4-hour here. Just keep in mind that one bearish indication up top, which is agreeing with the daily. Otherwise, things look pretty strong. And on our 60-minute, this is that time frame where we didn't really necessarily get a bearish divergence off that previous or off of the all-time high, which was why I was skeptical of it being a very protracted sell-off. Something that would bring us all the way back to 43.50 and below. Of course, that could be in the works here this morning. We could continue to sell off. Would not be surprising, but overall things still look pretty bullish. We do want to keep in mind that right now, off of the current high that we made in the overnight session, we do have a bearish divergence. When I go over to my 4-hour, I don't necessarily see anything like that, but when we get a little bit more resolution here, we do have a pretty good bearish divergence off the overnight high. So this is going to probably be one of the lines in the sand this morning for us. Keep in mind that we have this leg down and we are holding just in front of the 61.8 and this swing low that we made in yesterday's market. So not a great sign for the bulls. And things are pulling back here. And we can start to look at the actual retracement of this smaller leg to the upside. So you can see that where the bears defended the 61.8 and this previous swing low back here. And if we look at the current leg, we have this push up from 11.75 to about 48.75, the overnight high there. And we're coming right into that 50% retracement area. So 60-minute has, the only thing it's telling us right now is there's a bearish divergence off the overnight high. So let's jump down to the intermediate time frames. We could actually end up having a little bit more of a bearish bias overall this morning, especially if we get agreement off of the overnight high. So let's go to our 30-minute here, and see on the 30-minute I actually drew in a retracement from the lows that we made back during this chop fest that we had back at the end of July going into August. The lows from that to the high that we made on Monday, we have this overall retracement scheme here. We did end up holding just in front of the 61.8 on this sell-off yesterday. So again, holding 61 is somewhat of a bullish indication, so we'll see if that ends up holding there. And right now, just want to zoom in and look at the overnight high and looking at the numbers here. Have basically a triple top with the 3 candles, or we'll say all 3 candles came up and made the same high. But I think that you can see here that we did actually push a little bit higher. So there is the case for a bear divergence right there. So bearish signal here off the overnight high in agreement with the 60-minute bearish signal. So we do have the 60-minute and the 30-minute giving us that bearish signal there. So not too surprising that we're getting a little bit more of a pullback here. And currently we are seeing maybe a little bit of bullishness there off of 35. But there was just not enough follow through. So you got the bullish signal at 35, pushed to 43, and then we're continuing to sell off here. So looks like we're starting to get a lot more bearish indications here as we look at things. And then you can see the very clear bearish divergence on the 10-minute up here as well. And there's that retracement again right here of this whole leg. And we are pushing down into that 50% retracement area. Also keep in mind that we did have some pretty good resistance in the market right around 31.75, 32 here, where we got a pretty strong reaction and a pullback there of about over 10 points. So as we pull back here, there is a potential for that level to hold, but I am noticing that the 61.8 retracement down here around 44.24 to 25 is also another really good resistance area in the market from yesterday. And so if we do continue to pull back, we have some levels below us here to watch. And so if I could just kind of wrap everything up here, I know we went through a lot. if we stick to the high time frames there, or the ultra high time frames, there really are no clear indications of exhaustion on this current push. And then when we get down to the daily and the 4-hour, we start to get bearish indications off of the high that we made on Monday. So we're starting to get a little bit of weakness in the market. And then when we dial down to the shorter time frames, we are starting to see a lot more bearish signals off of the overnight high than we do have nice clear bullish signals off of the lows that we're making. And so personally, I'm going to have a little bit more of a bearish bias this morning, looking for shorts, but keeping in mind that because the higher time frames don't show any indications of exhaustion, I do expect at some point for the bulls to recover here and continue to push. But for right now, things look fairly bearish. So we're going to want to look for shorts off of some of the key levels we have, assuming we do get some nice clear short time frame bearish signals at these important levels.